Uranium stocks continue to act pathetically weak, and we've been covering for the last few weeks exactly why that is. We are watching a train wreck in slow motion because we've been talking about exactly why these assets are falling. It's for the exact same reason the rest of the financial system is falling. It's because the US government is manufacturing a crash in financial markets to lower interest rates. Here's the performance of the SPRA Uranium Miners ETF, down almost 18% year to date. Small cap stocks, the Russell 2000 index, is down 9% year to date. Look at how they're both collapsing the last few days. Again, we've been covering why the federal government wants it to happen. Here's what Donald Trump is saying about the current market meltdown.
In the meantime, guess what? Interest rates are down for the last 3-4 days at good levels. I've been saying, let's get interest rates down. Nobody ever gets rich when the interest rates are high because people can't borrow money.
Their only focus is interest rates. Previous administration was not focused on getting interest rates down. They wanted everything to be status quo. They didn't want to manufacture this massive meltdown in financial markets, but with the new administration, they see it as an opportunity. So like the first few months of the year, we're going to floor assets, cause a massive financial crash, bring interest rates down, and that's going to set the stage for a massive bull market, right? That's why they don't care that the stock market is falling. Donald Trump knows he can say whatever he needs to say to get assets pumping. He is not doing that. He's focused on interest rates falling. In deflationary collapses like we're seeing across all financial assets, bond yields go down. And so that is exactly what we're seeing. Here's the chart of the 10-year bond yield going from almost 5% to almost 4% in the last month or so, right? So they're still working. Unfortunately, they probably want that closer to 3%. So expect more pain ahead. And here's what Donald Trump said again when asked about financial markets and what he thinks about them falling.
So, Mr. President, when you look at the market selling off, that didn't concern you? And
Nope,
where do you see it going?
doesn't concern me. I think some people are going to make great deals by buying stocks and bonds and all the things they're buying.
Again, he's saying people are going to do really well buying the dip in assets because they're literally in control of financial markets. They control the narrative. They want assets to crash. They are. When they want assets to pump, they will. And we've seen how correlated uranium stocks are to the rest of the financial system. They're very high beta, meaning they're more volatile than the rest of the financial system, which means that when we get that turnaround, these assets are going to skyrocket. And it's not just based on liquidity. There's insane fundamentals behind these assets. This is from the Financial Times. U.S. and European energy groups at risk from uranium supply crunch, right? They're literally talking about how there's a massive uranium supply crunch on our hands. So really doesn't get better than this when you understand why these assets are falling and how bullish the fundamentals are. So it's been a quiet week for uranium news, but here's why one ASX uranium stock is racing higher. Lotus Resources shares are catching the eye on Wednesday. This came out on Wednesday, March 12th. In morning trade, ASX uranium stock is up 4.5%. Investors have been buying the uranium developers shares today after it announced the results of an updated scoping study for its uranium project in Botswana. According to the release, the scoping study has confirmed the project's potential to become a significant uranium operation and complements its production at the uranium project in Malawi, which is on track to restart in the third quarter of 2025. We've covered this asset on this channel. Lotus Resources has a massive amount of uranium in the ground. Management believes that Lotus will become a globally significant U3O8 producer when combining both assets. It estimates the two projects could turn the ASX uranium stock into a 5.5 million pound per year producer, which potentially makes it one of the largest uranium producers on the Australian share market. The updated scoping study is based on the December 2024 mineral resource estimate and supports the potential of this project in a stronger long-term uranium price environment. So this asset could easily be taken over, right? These assets are all dirt cheap. I showed you the interest rate. It's coming down, which means it's going to get easier and easier to buy these assets because the cost to borrow is going down. It's like Donald Trump says, no one gets rich in high interest rates environments because no one's borrowing money. Well, when the interest rate comes down, these assets look very favorable because you can buy and you can borrow money at low interest rates and acquire them. So They're falling for no good reason except for liquidity flows and the fact that the rest of the financial system is crashing. And so the bearish price action is massively diverging from the bullish fundamentals. And so very likely assets like this could get taken over. Here's another asset. Stifel, a multi-billion-dollar Wall Street firm, initiates uranium energy stock with buy $10.50 target. On Wednesday, Stifel Canada began coverage of Uranium Energy Corp by assigning a buy rating and setting a price target of $10.50, joining a strong analyst consensus with price targets ranging from $10 to $12. The firm highlighted the company's rapid expansion of production capabilities within the United States and its potential for near-term production growth. According to Investing Pro data, analysts anticipate remarkable revenue growth of over 580% for fiscal year 2025, though the company is not expecting to achieve profitability this year. Uranium Energy Corp is in the process of developing multiple in-situ recovery assets in the U.S. and also possesses promising exploration projects in the Athabasca Basin, known for its rich uranium deposits. Massively bullish fundamentals. These Wall Street analysts that study these assets full time are projecting huge upside in these assets based on the massively bullish fundamentals, regardless of what the price is doing, right? Everyone's panicking about price. Does not matter. Trump is saying stuff's going on sale, and the people that study these assets realize the massive long-term potential.